Good morning, good afternoon, and good evening to all of our crypto fans and listeners. You have with you your famous co-hosts, Carlos Zendejas, Matt Reed, and Robert Ridzak from DQ Digital, here to discuss all things trading in the crypto world, macro, and I know Matt's favorite topic, algorithms. We are going to be talking a little bit more about some of the recent news that's been hitting the crypto markets recently. I know XRP came out with some news. Been a lot of news happening also with regulations more broadly. Can dig into that a little bit more. But first, gentlemen, of course, as we do at every show, we talk about a little bit what we're drinking today. What we got going on?
Oh no, nothing. I've got water.
Nothing.
Lame.
Water.
Yeah.
We're hydrating.
I'm going with the Montauk Watermelon Session Ale. Very summery.
Watermelon.
Yeah.
How do they make that?
Deliciousness, leprechauns, magic. I don't fucking know.
The watermelon fairies.
Mm-hmm.
Interesting.
It's fantastic. I just flew in from Chicago, so I had a little bit of a client event, so I'm trying to stick with non-alcoholic beverages today. Gotta nurse my liver back to shape. So I'm just drinking a beautiful.
That's always fun.
Coca-Cola.
Ooh,
Very nice.
Is it
Although
it
is
a full sugar?
Full cancer. It is This is Coke Zero. So this is the carcinogenic version of Coca-Cola.
Got it.
It's compared to the not carcinogenic versions.
I'm not sure which one is healthier, my beer or your Coke Zero.
You know, I say some things that we're dying for, and for me, that's Coca-Cola. Gotta die sometime. Might as well die happy drinking my sucralose or whatever this artificial sweetener is. Delicious.
I'm a big fan. Have you seen this guy Brian Johnson? He founded Venmo, and now he's got this thing called the Blueprint, where he's basically like takes his blood every day. He sleeps in a blackout room by himself 10 hours a night, and he takes all sorts of supplements and gets laser treatments and only eats 4 hours a day, fully vegan. And his goal is to like completely reverse aging and live forever. And my thought is, that sounds fucking terrible. Like,
what about quality of life?
Yeah, I'd rather die at 80, like super goddamn happy, than be this guy. So
yeah, I was watching. So the only thing that is, I'm totally going on a tangent before we talk about crypto, but very interesting. There was this guy I saw on, there was a documentary talking about anti-aging. And one of the major drivers of aging that's at least been proven so far scientifically is caloric consumption. The more calories you consume, the more that can expedite the aging process. So they had this guy who had engineered these crusty looking, they almost look like Nutri-Grain, like little blocks that had a lot of nutrition and the smallest amount of calories. I was like, you might just kill me. I'd rather not have that. Give me a cheeseburger.
Sounds about right.
Yeah.
Sounds about right.
So, boys, I know a lot to talk about. We're trying to do it in a little bit of a short period of time. Maybe we could talk a little bit about XRP to kick things off. I know they had some news come out last week. It's not a total victory for them, but it's definitely a lot better than a lot of folks were expecting. So I think it was.
I think that it was a total victory for crypto, and it was partially a loss for XRP specifically. Because if you look at the things that we learned from the case, the judge explicitly stated that XRP, and for that matter, most digital assets, although this specific case really only applies to XRP, but the same thing can be used across the board. It is now precedent that the digital asset itself is not a security, and so therefore, using it in like programmatic purchases by anonymous people on exchanges does not constitute a security, which is pretty much probably the most important thing that we learned from this, because this basically means that like any secondary sales that happen on exchanges of cryptocurrencies are not securities. The only time that the sale of a digital asset is a security under this particular case is when you are selling it to institutional buyers as an investment contract. So for example, like if you're the Ripple Foundation or Ripple Labs and you sell an investment contract that allows your seed or Series A investors to have certain amounts of XRP, right? Then that's a security contract.
Mm-hmm.
Anything else is not. So I think that's a massive win. It's also completely in line with all of the pieces of legislation that are currently in the House and Senate, where we take a similar track that, unless a digital asset is being sold as sort of like a centralized, venture capital style investment, then it's effectively not a security. And so that to me is a huge win for the industry. Gives a lot of clarity, and it forces the both House and Senate to really take a serious consideration in terms of what their next steps are in terms of drafting actual legislation.
Yeah, I think this ties into a lot of the comments we were talking before about how, depending on where the token is issued or where it is in its life cycle, it can be viewed as different things, right? So if it's earlier stage, more centralized, it can be viewed as a security, but as it gets farther along its life stage, it can be deemed differently. Also with like initial coin offerings or token offerings, that the actual issuance function can be seen as one thing versus receiving those same tokens in a different format can be viewed differently.
Yeah, so I think it's a very important step. And if anything, probably the biggest beneficiary of this case is Coinbase. And if you actually saw what happened to Coinbase's stock when it happened, it would jump like fucking 50%.
10%, yeah, something.
Yeah,
was it 50? Wow. Okay.
Well, it went up 10% when they got listed as the surveillance partner for all of the ETFs. And then it went up an additional 50 might be hyperbolic, but it went up some additional, like 20, 30% or something like that off the back of the Ripple case. Because I think the other thing that most people don't fully get is that this court precedent, while not binding, serves as, a reasonably suitable precedent that basically says all of the things that the SEC is claiming that Coinbase did wrong in running in, unregistered securities exchange is actually no longer valid. And so based off of that court case and based off of the legislation currently in front of the House and the Senate, the SEC really doesn't have a whole lot to stand on in terms of its enforcement action against Coinbase, which is, once again, a massive win for the industry on the whole.
Yeah, it's going to be really interesting to see how that plays out. I know Coinbase has, Coinbase's legal team too has been so top notch. I feel like they're going to, it's going to be heyday for them.
Yeah, I think if you want a good follower or a good follow on Twitter, Paul Grewal, who is their general counsel, is great. He's really thorough. He gives some like really excellent takes. In fact, he posted on Twitter an excerpt of the transcript for the initial hearing that they had between the SEC and Coinbase. I gave that a read. I can tell you full stop that it was like probably one of the most bullish things I've heard if you're like pro Coinbase. Because in it explicitly the judge said, I don't buy for 1 second that you guys didn't approve of their business model when you approved their S1 filing. So I think that is pretty telling that they're in a situation where they're not fully buying some of the things that the SEC is saying. So they're definitely getting pushback. They're definitely getting pushback from the courts. That's for sure. And I telling a tale out of school, but was at a children's party.
Yeah.
And met somebody who works in the Southern District Court of New York. And one of the things that I thought was great was basically he was like, listen, man, like these judges they're all nerds. And even if, even if they got appointed by a Democrat or a Republican or whatever, I think the thing that I have the most confidence in is the rule of law. And they don't care about, whether or not someone's spin on take is right, is like, valid or partisan. They just want to get the right answer. And he's like, we have so many checks and balances in the court system that, you can't kind of make it up, which is one of the reasons why I think, judge like Annalisa Torres, who put this out, very well respected by her peers, kind of called it like she saw it. And if you notice, there's no pushback. Like, no one's ad hominem attacking her as some sort of activist judge. Most people just say it was a pretty by the book, call it like I see it, judgment, which I think is a good indicator of whether or not it's likely to stick.
Go democracy.
Yeah. I would say more rule of law. No, I'm dead serious, because I think, like, while, you have very partisan gamesmanship happening in the legislative branch of the House and Senate.
Things be politicized.
The courts tend to do the thing that is the right thing to do more often than not, and that's, I guess, one of the beautiful things about our court system. That being said, the other nice thing is, I really do believe that it's making the Democrats reconsider how much leverage they have to stall on legislation for crypto. So as a result of this, we saw serious momentum on the McHenry bill, which is the bill in front of the House. There's like the Loomis-Gillibrand deal in the Senate, and then the U.S. Agricultural Subcommittee actually just released a competing legislation in the House as well, which I think will probably just get meshed together, and they'll kind of take elements of both and kind of put them in. But the fact is that there's a lot of momentum now on an actual piece of legislation, which is, to be honest, like much faster than I thought we'd see any movement on this. I was almost positive they'd punt even anything outside of like a cursory hearing to discuss it until after the next election cycle.
Yeah.
Why does the Agriculture Committee care about crypto? That's interesting.
Farming. It's farming.
Commodities. Because they
oversee commodities too.
They oversee it. There's a lot of overlap in the sense of they oversee commodities.
That makes more sense.
Yeah.
I was just thinking about yield farming.
Viva Nebraska, my friend.
Yeah. That's excellent. Yeah, it's so it's fascinating to see how the judicial system has played out. You touched on something. Now I'm forgetting what I was going to say. Something very pointed, and I can't remember. Maybe it'll come back to me.
Did I distract you by talking about how awesome Nebraska was?
Yeah. I just started dreaming about. I just had like images of cornfields and it's like farmers. I remember
cornfields
yeah. Overalls, people just hard at work. Question for you: do you have a sense for this? You may not, maybe this is pure speculation, but how long it would take for something like these bills to get passed through the House to get approval and kind of make their way through the system, where it's like actually getting laws implemented. Obviously, because I feel like this is something that could. It's great to see it coming through, but this would also take a long time for it to actually become law.
Yeah. So the linchpin really is that so the McHenry bill is drafted. It has gone through committee, meaning like they've had an open debate and an open hearing in committee, and it's in the period where people can submit their notes, and they have said that they are hopeful that they will get a vote on it this summer. Once that's done, it then gets punted over to the Senate, and the Senate's currently working on their bill. So the thought really is that the Senate's bill, which has been published and put out, they'll negotiate kind of behind the scenes to figure out what amendments they want to make such that it more closely mirrors each other's bills and therefore has a higher probability of going through. Pre-XRP, the speculation was that the House, which is primarily Republican, and for whatever reason, crypto has become highly politicized. So the Republican House is more likely to put out a piece of legislation this election cycle so that they can appear like they're doing something good for their reelection. The The Democrats, on the other hand, prior to this, were sort of, in Elizabeth Warren's term, putting together an anti-crypto army, and were attempting to basically go under the route that no additional legislation was needed, that existing securities laws were all that were needed, and that the SEC should take over everything. I think that they're finding they have less negotiation power now, so it could be that they get forced to go to the drawing board and push something through sooner than later, because it does actually look like this will become a reasonably important issue for the election. Less so party divide and more so generational. Basically, like the demographics show that anyone under the age of 40 is pretty much pro crypto, and anyone over the age of 40 is still somewhat dubious. And I'm right on the fucking middle of that.
We're towing the line.
I'm towing the line. Yeah, so it's an interesting thing. There was actually something kind of cool where RFK Jr. said in a speech basically that, if he were president, he would seek to back portions of like the U.S. national debt with Bitcoin, and that he'd eliminate capital gains taxes on Bitcoin. So I think there's it, and Ron DeSantis has basically said that he's pro Bitcoin, and if elected, he would outlaw central bank digital currencies and ensure that innovation in digital currencies happened on public blockchains.
Yeah.
So that's also pretty cool. I mean, there's a number of things that might force people's hands, because I think, unlike the courts that care about getting the right answer, legislators tend to just want to do the thing that gives them the best soundbite and the best chance of re-election.
Yeah, I always find, philosophically, if we were to talk about all of this like 10 years ago and how I thought it would play out, I would have speculated that it would have been more of the Democratic Party that would have been more pro these type of ideas. And what's actually turned out is a little bit different, which is surprising to me. But when I dig into it, another flip side that I really consider is that the Democratic Party in general is very pro-regulation. Like they have like a lot of like regulatory, they like a lot of regulation. They put a lot of money into that, and so I guess in some ways I thought like this might be a play out for that. Yeah, it's surprising to see how the parties have split on their opinions more broadly. Obviously, there are folks internally that side one way or the other.
Yeah, I mean, it should be interesting to see how it plays out. You have guys like RFK Jr. that aren't really classical. Well, I would say they're classical Democrats, but not modern Democrats. I'd say, post Clinton era, the like JFK populist version of Democrats has not been in vogue. It's been more of like a centrist neocon, flavor. But either way, this isn't a politics podcast.
No.
Unless the politics are crypto, in which case Carlos is a single issue voter, and I will judge all the candidates based on whether or not they support my Bitcoin habit.
Yeah. And I know you're talking about Coinbase and how this has really been a tailwind for them. Some of these judgments that have come out, and they also seem to have a lot going for them too on the surveillance side of things, right? Like they are coming out as a surveillance partner for all the ETFs. I know we've talked about that before, about BlackRock and Fidelity and a few others coming out with filings for Bitcoin ETFs. And having Coinbase be that central surveillance partner kind of really ingrains Coinbase into the ecosystem even more if it wasn't already apparent.
Yeah, I think that the thing to think about there is that on the Coinbase side, the minute they get more credibility, and so this XRP case shores up a lot of their outstanding issues with the SEC. I think it also makes it such that there's a little bit less question about how valid of a partner they are in terms of being like the surveillance partner for these ETFs. And just, I think what it does is it really nudges the likelihood that these ETFs get done, right? Mm-hmm. There's significantly less political capital for being anti-Bitcoin, anti-regulatory clarity on these sorts of things.
Yeah.
And the more legitimacy that Coinbase has is sort of like the U.S. national champion for being the pro-regulatory, business type of crypto exchange. I think that the better we get at the likelihood of an ETF happening. And as we talked about earlier, the likelihood of an ETF happening is the number one thing that should drive the fair value of Bitcoin until it gets passed.
And if you see, I find, I mean, obviously this isn't the best metric, but it is a very quantitative metric. You just look at the discount to NAV that you can see on Grayscale's Bitcoin Trust, and I think it was at its wide was around 50% or so. And now it's shrunk by half. I think it's around 24% discount right now. So I mean, that just like, obviously that's very idiosyncratic to Grayscale, but I think it just touches on just overall momentum towards a Bitcoin ETF, since that's really what Grayscale is touted as the way that they can bring, close that discount that they're experiencing within their Bitcoin Trust.
I mean, and speaking of other court cases, I think, the SEC has technically, I think, until August 16th. That's the first date that it really has to give clarity on. I think ARK Invest is the first one up on the docket in terms of timing. But we could get a judgment on Grayscale's case against the SEC, basically suing the SEC for the ability to turn Grayscale Trust into an ETF literally any day. Like that could hit next week. But most people suspect it'll come between now and the fall. So that could be a huge catalyst for Bitcoin prices as well. And if the courts continue sort of the precedent that they're on, most people have a very high probability of that going in the favor of Grayscale.
Yeah, it's with Larry Fink being jumping on the bandwagon too. There's a whole lot going on there.
I feel that's the hardest pill to swallow this last week. There's been so much good news. Like it's been XRP stuff's getting in front of the house. Coinbase are doing well. ETF, everyone loves the ETFs. You've even got Larry Fink coming out like really pushing Bitcoin hard. Yet Bitcoin prices this week didn't go the way you'd expect with all that good news. And so that's something that we've been chatting about quite a bit internally, right? Carlos, is why has that not been the case? And there's just been an absolute massive amount of selling pressure this entire week.
This is the first time you've seen that too. I've heard, I don't trade crypto on the daily, but it seems like around certain very positive news events, there also seems to be some weakness into it, as if they're like selling it. It's a lot more technical pressure though than you would say, right? Versus fundamental.
Well, yeah, it's like
selling into highs or selling into strength. Maybe is that maybe like what might be some
no? I mean,
strategy?
let's call a spade a spade. The reality is that one of the largest holders of Bitcoin is the U.S. Department of Justice, right? They confiscated money or Bitcoin from Ross Ulbricht, who is the proprietor of Silk Road, back in like 2013 or 2014 or something along those lines. That position is now worth like $6 billion, and they're selling it in tranches. If you follow on-chain activity, which is one of the beautiful things of Bitcoin, last March, they moved a tranche of almost 10,000 Bitcoin to Coinbase and systematically sold that. They sold it market orders, which means like every time they did it, the market dropped like 5%.
That was the big observable one where everyone was like, what the hell is that going
on? And then the other thing is that on Wednesday of last week, they moved the same amount of Bitcoin over to the exchange, presumably to sell. And so what we saw is that as the news hit, basically other cryptocurrencies jumped by like 20-25%, but Bitcoin and then Ethereum, because they trade pretty closely together, basically didn't jump nearly as much. And if you were watching the order book, you would actually see anytime the price got to like 31K or above, someone was spending an inordinate amount of money to suppress the price. I don't think it was nefarious. I actually think that it's just like, because if you've ever worked a large order before, you know that your goal is to try and like move it, and you can opportunistically, sell when it's popping. So if the price is going up, you basically use, especially if you know you've got a lot to do, you use it as an opportunistic way to push more through the market than your pre-scheduled amount. So what I suspect was happening is that the DOJ was doing what's called a TWAP, or a time-weighted average price algorithm, where they basically just said equivalent of, I've got 100 minutes to do $100 million of Bitcoin, and I'm going to do 1 million every minute. And so what you saw was, when the XRP case went off, people were just systematically. And so for every exuberant person that was like, buy, there was someone else going and sort of meeting them in the middle. And after the exuberance of XRP wore off, well, the DOJ still had more to do. And so the day after, during morning liquidity, when there was still plenty of stuff to do, it was, they were moving, everyone was moving, but the price kind of stalled off. And then by the afternoon, when normal liquidity died off, they kept going. And so you just saw like a break. And then finally we just ran out of new buyers, and the price just went down by like almost 5%, almost instantaneously. So that to me, and when you look at it, it's very clear that someone was doing clips in a TWAP over and over and over again. And if you think of the amount of people out there, especially the amount of people that telegraphed that they were moving almost 10,000 Bitcoin to Coinbase, it's not confirmed, but if you kind of put two and two together, you would say that DOJ was working a very large order, basically for the majority of this week. So from...
Or had someone work it on their behalf, but they had... There's a large amount of flow.
I was going to ask, because from the sound of what you have all said, it doesn't sound like a very sophisticated liquidation strategy. And so I think that's just the way it sounded to me. I was going to ask whether you thought that this was being professionally managed or not by the DOJ, or if they just had a 25-year-old intern executing trades.
Well, I guess you got to look at the previous round, which was, let's cast it like back in May. Was it March or May? I forget. But that was not managed at all. That was like, I've got some Bitcoin to sell. I'm just going to scoop whatever's in the order book. And that caused like 5% instantaneous market move. This 5%, Carlos is talking about, like, it's taken days, really, but it's not just been one big gap. It's like, collectively we have lost 5, but we also lost a lot of that into this big rally. So, if that hadn't happened, it probably would have been a lot worse. But there's just so much demand for people to buy at the time. So it's been a lot slower.
So here's what I'd tell you about it, because I agree with Matt fully. I think they managed it professionally, but I think, and I've been on the other end of this, right? So I've worked at banks in FX. Most banks sell what's called agency algorithms, where you go to the client and you say, okay, here's the deal. We have an algorithm for you, and that algorithm is going to go into the market, and it's going to sell some very large amount. There's some toggles that you can do and all sorts of stuff. And the problem with that is that you can't control everything. You can't protect the client from themselves, even if you give them an algorithm or sell them some sort of like execution along those lines. So, for example, if they have an algorithm that breaks it up into 100, and you're like, well, you should probably work that over 4 days. They're like, no, I want to do it over 2. Well, then no matter how good the algo is, you're still pushing more through the market than you think. And it becomes almost like a drunk guy throwing a punch. Like, they just telegraph it so clearly that even though, they think they're being sneaky, they're being very loud about how they're executing. The other thing that will often happen is that people will break out these, between multiple providers. So they'll be like, shop A, shop B, and shop C, you guys each take a portion of the algo. Well, that becomes a bit of a game theoretic, because let's say you're shop A and you're really good, but you don't know who shop B and shop C are, and you can't trust that they're very good. Now you actually have incentive to try and get done faster than them, because you don't want to be the last one holding the bag. So, I mean, there's like a number of game theoretics that come out where, like, even if you try and do it over a TWAP, you can still, by the way that you set everything up, still make it not very good.
You can cannibalize your own order.
Yeah. So, and in fact, this reminds me of a time where when I was at Deutsche Bank, we used to have an equities office in Jacksonville, Florida. And there's a story. I'm not even sure if it's real, but this is like a story that I heard when I was getting beers.
If it's good enough, it should be real. We'll pretend it's real.
Yeah. But like the story is that there was a junior analyst on the equities trading desk in Jacksonville who, while his boss was out of town, was given a client order to do $1 billion worth of something. And he said to himself, well, surely $1 billion algo is too much. So instead, what I'm going to do is break it up into 4 $250 million algos and run them simultaneously. And that he did. And the desk lost several $1 million on the deal. And by the time it was all done, they fired everybody because it's like, you're an idiot for doing that, and then you're also an idiot for enabling him to do it. So like there's a number of different ways to screw it up. The point being is that the problem with this is that I think the market, most people I knew in the market that have an idea of what they're looking at could very clearly see that somebody, in all likelihood, that was likely the DOJ, not confirmed, but in all likelihood, was just working at an extremely large order for the market. And that can be maddening, especially like if all of the fundamentals and all of the economic backdrop of like Bitcoin should be going up, and then here you see it just grinding down. It's really, really, really frustrating. And more than anything, I think especially if you don't know what you're looking for and you don't listen to the right people, you're going to like read an article if it's like, oh man, Bitcoin sold off by 2% because the consumer confidence, survey came out and it was bad. So this is clearly driven by macro, or, there's some sort of like gigantic bear. There are people out there that don't believe it. What do they know that I don't know? Or maybe Binance is about to go down. So there's all sorts of like fears that permeate through the market because you can't confirm what was going on. But if you look at the order book, I would say like the most likely phenomena is that there is just a large seller, and it happened to be at a time when we also got good news, and that spooked the market because they're like, everything should be going up and it's not going up. What the fuck is happening?
I feel like in this case too, it's a little bit simpler too, because that there is this giant whale that is the DOJ that needs to liquidate. So you can like back into that. And obviously the Bitcoin market is as growing as it is. It's still in a nascent part of its evolution. So it's kind of like a little bit easier to isolate. I think you touched on a really interesting just trading example. I know a lot of the audience, they're aspiring traders, or maybe they're earlier on in their career in trading, and just being able to distinguish time horizon like for your trades, right? Because like you can be long-term bullish or have like a time horizon of a week and have a very different perspective on pricing versus what's happening over the next couple of hours left in the trading day.
Oh, for sure. And I think if you think about like how this week traded, Matt and I spent a lot of time looking at technicals, and we spent a lot of time trying to nick little clips here and there, because the fundamental bit and like everything basically says like we should just get long here versus you've got this just seller, so you kind of need to be aware of that and be mindful of the time horizon, and ultimately understand that usually these things revert back. So if you end up getting long Bitcoin at a good level, but it still kind of keeps going out of your favor, you're probably just better off warehousing it and letting it roll, because ultimately on these types of liquidations, unless the narrative gets out of control, I mean, all of the macroeconomic indicators line up. And ultimately, people will see the trend and they're like, actually, I think people are done selling, and it should revert back to sort of a reasonable level that's indicative of what we think is the fair value. But it's like you said, you definitely got to keep in mind what your time horizon on the trade is, and sort of like understand the technicals that are driving it, rather than buying too much into the narrative of oh man, people aren't liking this, or whatever. There's all sorts of like different things that people and a lot of market pundits will put out a story because they get paid to put out stories.
Mm-hmm. Totally. Can you imagine Bloomberg without any stories? And it'd be like, oh, I don't know what the hell's going on. Jesus, beats like, me.
Every day the headline would be like more buyers than sellers, or more sellers than buyers.
Yeah. Like, oh, riveting.
Yeah, the market went up because more people were buying today.
Yeah. Oh my God. Thank you so much. Yes. I will subscribe to your that's
fantastic.
Pro version. Yeah.
Well, so this is also interesting. When I was at the bank, I'd often, you go to a client meeting and they bring like the macroeconomic analysts, and they'd be like, well, let me tell you about our forecast for GDP and whatever. I remember like being at a number of different client things, and I had one guy who was just like borderline autistic, and he was like, listen, I'm sorry, but the bank's macro analyst is by far and away the world's most useless person. And he's like, he looked at me, he's like, are you the trader? And I'm like, yeah. He's like, okay, talk to me about flows. That's all I care about. I don't care about your views at all. I just want you to tell me who's trading what. I was like, okay, we can do that.
Yeah, I guess like to your point, like if your time horizon is far enough in advance, there's so many variables that come into that view that it becomes a much weaker argument than something that's a little bit shorter term, right, over the near term. Because at the end of the day, at the end of the day, everything is flows, right? That's like the most fundamental aspect of markets. Fundamentals don't really. They're just a manifestation, or they're just like an indication for how flows should go. But at the end of the day, it's always flows.
And I think like when I was in the FX market, the trick to it was really more along the lines of like, all right, well, I know this hedge fund has a mean reversion strategy, so when this happens, I'm going to see some flows from these guys, or like, I know that bank A has a certain execution strategy, and so if I'm in a deal and I'm competing against, so and so on the deal, like if I lose, what's probably going to happen is this, and so like you tend to learn these like more so what's the fundamental story, and or less so the fundamental story, and more so like, well, what are the dynamics around who's executing and why are they executing that can be just as important in terms of generating alpha. And I think in some ways that's the beautiful part about quant finance, is that if you think about what quant finance does, quant finance just learns patterns in how people execute and how the flow moves, more so than the model is not parsing through Twitter to find sentiment of a bunch of people. It's really just saying, all right, so how are you guys trading? Are you trading like Muppets? Is there nothing going on? What's the deal flow look like? And that's great, because you don't need to stress about anything. You just as long as your model can pick up those patterns, and people tend to deal the same way over and over and over again. That's why it's a very powerful way of dealing in the market.
So I love this last segment we were talking about trading, some of these different strategies. We should try to do a little bit more of these too in the future. I really enjoyed it, guys. It's great.
Yeah, I'm all about that. Got
sweet
a bunch of random stories from our days in the market.
I love it. We'll try to do that. Let's do that on some of future episodes, guys. This is great.
Cool. Well, on that note, everybody, happy Friday.
Yeah, have a good weekend, guys.
Have a good weekend.
Thanks. See ya.
All right.
Bye.
Cheers, guys. Bye.